Hello and welcome to another update video about Bitcoin. So we only want to take a look at the smaller time frame in this video. Bigger picture, no change, as we're still holding above the critical $92,665 level. That is really an important support level, the 78.6 retracement down here. And it's still holding. And this is sort of the main support for the overall, let's say, thesis or idea that a larger degree fourth wave bottomed on the 13th of January, still holding, and therefore the overall context of the chart hasn't changed. So far, however, since the market topped locally here in a wave 1 or an A wave in the white scenario on the 17th of January, the market has failed to rally impulsively. As you might be able to see here, this was a 3-wave move. This was not clearly 5 waves. This was a 3-wave move. This was a 3-wave move. And at the moment as well, this is also only a 3-wave move, but has the potential to develop into a 5-wave move. So that is what we are observing at the moment, what we're watching. From an Elliott Wave point of view, the market simply dipped into a larger support area and is trying to form a low in this region. But the market might still seek to form another low. And this would be confirmed further should there be a sustained break below this support area, the micro support, which we're going to talk about in a minute. But overall, no change to context. And we had this triangle here recently, and the price broke to the downside. We can also now, I always like to tidy things up, so we can take some of the microstructures out that we don't need anymore. I will leave the trend lines here on the chart, also of the triangle, because you can see the market respected these trend lines for a while. And then we had a breakdown, and that was a confirmation line. And now we're like retesting this from below. So I find it relevant. At the same time, when we talk about trend lines, we have a trend line that's coming down here that the market is retesting again. Okay, so we are below and above trend lines, and the market has not yet shown a 5-wave response to that lower support area. And it's important to hold above 92,665 in order to keep the overall idea alive that a larger degree swing low formed on the 13th of January. That's just important, okay? Below that level, it opens the door to round about 70 to 80K again, maybe 82K. Don't want to scare anybody, but it is what it is. I have to remind you guys about the levels regularly. Okay, but for now, we will see if the market can generate a 5-wave move up from yesterday's low. And I'm not saying it will. We're simply watching, okay? We're simply watching if the market can form that 5-wave move, because a 5-wave move from an analysis point of view would be the first confirmation that a low of sorts has formed. For now, this is a 3-wave move. It could still be, even though large, but it could still be a 4th wave. It broke above resistance yesterday, but a resistance break is always only the first signal, okay? And what we're dealing with here now is a wave 1, a wave 2, maybe an AB. Is this another 1-2 setup maybe, or maybe wave B is still unfolding? That's a bit unclear. We're talking about microstructures. But this is the very first micro support area. It doesn't mean that if this breaks, it's all failing and there's guaranteed a new low. But we need to understand that there is a micro support area that I'm showing here, which is weak support. For B waves, support is always weak because B waves can sometimes go deep. They could even overshoot to the downside. But in most cases, they should show a response here. This would be ideal if this really is a diagonal pattern to the upside. I'm not convinced yet that we're really working on a 5-wave move, but the chance is there, the opportunity is there, let's say it like that. I did say to you yesterday that one more low would technically, in an ABC structure, still look best because the C wave only has 3 waves down so far, and another 4-5 pattern would look best. But due to the size of the rally, it is at least something we can consider that the low is in, and I'm just watching for a 5-wave move. Without that 5-wave move, it could simply just be a large corrective rally, okay? And yeah, all I can say is that as long as we are holding 99,830, I'm tentatively looking for higher prices. Any break below that will increase the risk that one more low could form. in wave 5 of C there, in the yellow scenario. And what I really don't want to see in this scenario overall is a break below 92,665. Okay, someone asked yesterday in the comments, you know, what can I do with that information that we don't want to see a break below that level? Well, it just means that below 92,665, our base case has to be revised. Okay, so the primary count at the moment is that a larger degree fourth wave bottomed on the 13th of January. And below 92,665, this idea, this thesis about the market structure will become far less likely. So therefore I said, you know, I don't want to see a break below that level, at least not a sustained break. If that break happens, right, I mean, the market doesn't care about what I want to see or not. It's not meant like that. It's meant like, okay, you know, I would have to change my scenario if that happens. And it's always based on if-then conditions. And that's why I said, if that happens, the market will most likely give us a dip into the 70 to 80K area. All right. That would require further confirmation, but the probabilities will start to shift then. So for now, we have levels to watch. The next upside target, which would be ideally reached in circle 3 in blue, is 105,389. The market moved a little bit closer to it since the last video, but we're still quite far away from it. So I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.